The views expressed in this podcast are not to be taken as either trading nor financial advice. Neither the announcer nor the Sirius Report make any claims to be certified financial advisors, and all reporting is dedicated solely towards being both informative and educational. Greetings, everyone, and welcome to the Sirius Report Market Wrap-Up for Friday, October 25th, 2024. Today, we're going to take a look at how the markets fared. It was a down week for the Dow especially. Nasdaq held their own a little bit with NVIDIA. We're going to see the ups and downs in gold and silver, what the bond markets did, and in spite of what the Fed is dealing with decisions for the next rate cut or stay the same. And we're going to take a look at some information as we go forward. So with this in mind, let's go ahead and jump right in and see how the markets fared. Well, as I mentioned, the Dow was down 259 points, and it was skating, losing over 1,000 points this week. Going into Monday, it was over 43,000 on the Dow. Today, it was down 259 points to close out the week at 42,114, while the Nasdaq was up 103 points to 18,518. Tech is ruling the roost, and SP 500 was down 1.74 points to 5808. One interesting thing that the NYSE, New York Stock Exchange, is going to do is they are desperate for some liquidity. And in this, they are going to extend the trading hours to 22 hours a day from 1:30 a.m. to 11:30 p.m. Eastern Time, all weekdays, excluding holidays, to allow individuals, people, investors, and institutions to invest in ETFs. So they're pushing the ETFs. They're trying to get people into paper to look away from moving into money markets or taking their money completely out of the markets. They're looking, here's an ETF, you can sit in that, you can sell it anytime, et cetera, et cetera. So they're trying to keep and boost up a little bit of liquidity in the markets. So they're extending the time frame, especially after hours, to now be 22 hours a day during the week. In the bond markets, another day, another spike in the yield curve. The 10-year was up 0.04% to 4.242. It remains strongly over the 4.2 point, and the 2-year was up 0.041 to 4.107. The inversion between the 2 and the 10-year continues to get closer, and the yield curve as a whole continues to spike up, which is leading to mortgage rates hitting 6.8% for the first time in a few months. Take a look at the dollar for the week. Dollar ended up 26 cents to 104.32, closing out the week against a basket of currencies on the DXY. And meanwhile, gold and silver were pretty much beaten both sides of the tailpipe. Silver had gotten to a high of 34.05 before it was beaten down at the New York Open to 33.05, a complete dollar collapse in the paper price. But there was a recovery over the rest of the day where we saw silver end the day up 2 cents to 33.77. Meanwhile, gold had gotten a high of 27.49, was beaten down to 27.16, but it fared much better, regaining over the rest of the day $12.40 to close out just 30 cents below its intraday high at 27.4870. In the crypto markets, last 24 hours of trading saw a sell-off in like the last 2 hours of this cycle. Bitcoin ends up the trading session down 1.43% to 67,187, while Ethereum was down 1.8% at 24.88. Meanwhile, good day recovery for the crude oil. WTI crude was up $1.59 to close out the week session at 71.78. Meanwhile, Brent crude was up $1.42 to 75.80, and Murban crude out of the West Asia was up $1.03. And the difference between Brent crude and Murban crude, where it had gotten down to about 20 or 30 cents, is now back to about 85 cents difference. Taking a look at some economic data for today. Faith in the University of Michigan sentiment expectations dips in October. Final data for the University of Michigan sentiment survey in October is surprisingly bigly to the upside, 70.5 versus 69. Notably above the 68.9 preliminary print, as both current conditions jump significantly. But the problem is that this University of Michigan survey does differentiate between Republicans and Democrats who participate in the survey. Why is that important? Because we have an election in just less than 2 weeks, and the sentiment of the Republicans who believe that Trump presidency would be better for the economy rose 8% on growing confidence that he's going to win. Meanwhile, independents remain with a 4% gain, and the Democrats are down 1.5%. So while the sentiment as a whole, because of the independents and the Republican members of the survey, increased their confidence, Democrats as a whole decreased. See, everything's political today. It is a sad state of affairs. U.S. durable goods orders revised lower again. Preliminary data for October shows the headline U.S. durable goods orders fell 0.8% month over month, leaving orders down 2.9% year over year. As we say, it's been a recession for pretty much the whole year. Core orders rose 0.4%, while orders placed in U.S. factories were revised lower, suggesting firms are more guarded about investment. CapEx has been declining as well for the past 6 months. For the 6th month of the last 7, durable goods orders were revised lower, and it's the last time that the Biden administration will have a chance to monkey with this data point. Firms are worried. U.S. manufacturing survey signals 3rd straight month of contraction. Both the manufacturing and services survey data were better than expected, but still remain below 50. Manufacturing is at 47.8 versus 47.3. And services, well, it actually did remain above 50, but services is a relative one because we're talking about all the hospitality, medical, etc., which is not producing and big for the GDP. While the manufacturing survey did improve, it remains in contraction for the 3rd straight month below 50. Well, interesting interview that took place on CNBC over yesterday. Kevin Warsh, Hoover Institution Distinguished Visiting Fellow and a former Federal Reserve Governor, said the quiet part out loud in an interview with CNBC Squawk Box, where he dared to offer the logical rebuttal of the overarching narrative that the Fed is apolitical or independent. He, of course, said the flexible average, or where is it? Let me see the point here. Warsh begins with, they've had different theories about the cause of inflation and the measures they use, and people in the financial markets have tried to follow them. A few years ago, they were flexible average inflation targeting, but the point is that they suddenly started talking about data dependency. And data dependency comes from the White House, the BLS, the BEA, Bureau of Economic Advisement, or whatever it is off the top of my head. But the jobs data, the GDP data, the durable goods data, the manufacturing data, a lot of the core data points that come out of government created institutions, and the Fed laps them up like a dog. So when the Fed comes out and we had inflation starting to rise, and when we have Powell talk about being data dependent because jobs and unemployment haven't changed, well, of course they're not going to change when the information is manipulated. And this is the important thing that former Fed Governor Warsh emphasized, is that data dependence is just a dog whistle for the Fed to not have to act, because the data, when they look at the real data, they are in a quandary with how to move, primarily because we are in stagflation. So do they cut because we're in a recession, or do they hike rates because we have higher and rising inflation? Well, In this case, they just wait for the government to tell them what to do, and they act accordingly, not independent, but subservient to the federal government. Well, the UK, which is in dire financial straits, has decided that they're going to be pretty much politically correct when it comes to the financial system. What do I mean by this? Well, according to their new budget, they are changing the definition of debt. Here it is directly from the autumn budget preview from Moberly. Under the previous government's debt roll, the Chancellor would have had very limited scope for additional public investment. The Chancellor had confirmed that she will change the definition of debt to shore up more space for capital spending, with the latest reporting suggesting she is likely to use public sector net financial liabilities as the targeted debt metric. So they're going to change the variables to declare that they're not seriously in debt and justify the ability to borrow more money for whatever boondoggle government spending that they have. This is what we have, and this is why we have things like FASB 56, which the U.S. federal government now does not have to be transparent with its spending or its budgets. We have, of course, the near $36 trillion in official debt, but we have upwards of $250 trillion in unfunded liabilities. Promises made that they don't have the money for, that they expect to try to squeeze out of a rock or a turnip somewhere, or by the time that they have to deal with it, most of the politicians who pass this are going to be long dead or long retired, and they don't care. Well, we got one thing I'm going to talk about with BRICS, and this is significant because it's being floated around the alt media like a whirlwind. Now, as you probably know, if you listened to the podcast earlier this week, Paul and I gave a prelude to the Kazan BRICS 2024 summit and emphasized that there is no currency discussion on the table. Much of what is being discussed is done in secret. There are white papers that have been born over the past year and a half, 2 years, but they're nothing official and they're nothing that's really made to public. So when a gift was given, a symbolic BRICS banknote given to Putin at the summit while he was talking to some of the leaders, he held it out with two fingers. There were pictures taken, and there was an automatic assumption across the board that this is going to be the new BRICS currency. I want to dissuade anybody right off the top of the bat. This was a gift, a mock-up of a BRICS bill that has no real function, no implementation, and for all intents and purposes may have been a code between the individual who gave it to him and the president of Russia, that this is what the future looks like, and once they get the platform and everything settled, then we can go ahead and move forward. But there likely will be a process and a platform for bilateral trade and maybe even a centralized BRICS currency, but it's more likely not going to be digital. It's not going to be like the euro currency, and it's going to be cash that everybody and their brother within the BRICS environment is going to use. Finally, last thing I want to touch upon, well, depending upon who wins the presidency, Congress is already ready to try to anoint its desired goal of taxing unrealized gains. Fiscal year 2025 budget of the U.S. from the Biden administration to Congress includes a proposal to tax unrealized capital gains, a new dark turn in the annals of history of U.S. government revenue collection. Only one of several tax increases sought is a terrifyingly consequential one. And the reason I brought this up, of course, is that recently, and you take anything said in the campaign with a grain of salt or a cubic meter of salt, whichever one makes you palatable. Trump has been throwing out the potential of removing not just Social Security taxes or taxes on tips, but stopping all income taxes in favor of a tariff. Now, another name for a tariff at least locally, is a sales tax. It's a tax on purchases versus a tax on imported goods. And the funny thing is if you go back to 1900, as recent as 1900, 50% of all the revenues the U.S. federal government got were taxes on, or tariffs on sin taxes, alcohol, tobacco, firearms, things like that. So this is something to take into consideration, especially when you also take note that one of the primary reasons for the income tax amendment was that the federal government knew very quickly that they would have to enter into prohibition. And if they got 50% of their revenues from the sale of alcohol, tobacco, and other things, and they were going to lose a big portion of that revenue, they had to somehow regain that by implementing the income tax. So, for all intents and purposes, you can blame the income tax primarily on a bunch of, well, Christian temperance feminists who were also fighting for the vote, who wanted to get rid of alcohol and instead brought about an income tax that has enslaved Americans for the past 120 some odd years. Anyway, I want to thank everybody as always for stopping by to get your market wrap up for Friday, October 25th, 2024. Paul and I should be getting together for some more financial things we're going to talk about. We're going to do that probably tomorrow, and then we'll pop them out on the YouTube channel here over the next 3 days. So look forward to that. And to everybody here, don't forget to subscribe, like, share, comment, send this out to anybody you think it might be important. And until the next time we get together, everyone, have a great weekend.